Hello, Tyler Chianelli here. I'm back actually 3 years later. I shot the video about Netflix, how I turned 16,000 to 130. That was an amazing trade. There's a lot more trades like that. That one specifically, it resonated with a lot of people. I've gotten a lot of feedback. And I've also done a lot of reflecting, a lot of analyzing, a lot of back testing, a lot of researching on that specific strategy that I've really mastered and continue to remaster over the last, decade. So what I want to show you now is I want to show you the importance of what you're supposed to do when you have a winning leaps trade. Because making a trade and having a 500 or 1,000% gain is great, but it's short-sighted. It's short-sighted because you have to build long-term wealth by holding on to shares. You have to let things compound. You have to be able to produce income with your trades instead of just taking a gain in a year. You might not have a sell signal. And what is the point of investing to begin with? You want to invest using options to, number one, build wealth. Number two, because you like this stock, you think it's going to grow long term, not just for a year, but you have long-term beliefs of the growth of the company. So you want to be a shareholder, and you're using the options to leverage your capital in a more effective, efficient, and limited risk fashion. So I just want to say that I'm back in business as far as taking this to a new level. I'm here at my office. Had the home office where the last video was shot, but I want to go into the next room here in a minute and kind of draw this out on a whiteboard and show you the importance of not only the risks and what can happen, and of course it's great to look at a good trade when a stock doubles or triples in a year or two and you have leaps that go up 500, 1,000, 2,000% or more. But there's another layer. There's a deeper layer. There's a more important layer. And I want to talk about that. So let's jump into the next room. All right, welcome to this segment. I am extremely excited about this. This is the type of stuff that could change your life. And in a minute, I'm going to go through this example and kind of explain the risks and what can happen. But I want to preface this by saying that a lot of your leaps trades are going to lose money. When you're buying options, because a majority of options expire worthless, even if you give yourself the time, like 2 or 3 years, it's probably like half of the time you'll lose money. And you want to cut those losses quick. But the ones that work, whether it's 20% of your trades or 30% if you're doing well, or 50% if you know how to really pick good winners, if you let them work and you let them compound, then the results could literally change your life, and it could be absolutely incredible. Like this example on Netflix. So Netflix, in that previous video back in 2014 that I shot, I bought 40 160 strike calls that expired in January of 2014. Now I put this trade on in summer of 2012, so there's about 400 to 500 days. We'll say about 450 days till expiration, DTE. So that's a good time frame. Year and a half is normally where you want to be because you have a couple earnings announcements and you have enough time for things to kind of manifest. So at expiration, remember I sold this trade well before expiration on January 2014. I ended up selling it out like months before, even a couple months into the trade. I took off the first 20 contracts out of the 40. But what I want to say is when you put on leaps trades, if you go with a plan, and the plan is you're utilizing a minimal amount of capital to take ownership of a stock on or before expiration at that purchase strike price, you have to have some fundamental reasoning. You have to have a little bit of earnings insight, a little bit of valuation metrics through balance sheets and the financial statements. So this position, if I had held to expiration, January 2014, the stock was trading around 400 a share. Remember, I got in this, and if you saw in the first video, around 80 to 120, 100 a share. This was before the 7-for-1 stock split in 2015. So at expiration, stock's at 400. I have the 160 calls. Just off of intrinsic value alone, it's about $200 to $220. Really, the difference is $240. A lot of times, a $5 or $10 move in a stock when you're this deep in the money could make this $20,000 contract be $24,000. So at expiration, and I apologize, I have some jets here at the office. We're close to the Navy base, but at expiration, if I had kept the 40 contracts, again, you're going into this saying, I want to own the stock. I'm not going to sell out. Maybe you sell a little bit, and I'll show that in a second, but 40 contracts, we'll take the lower number here, 20, 200, that's a $20,000 contract. That equals 800 grand. So this trade that, you know, made 800%, risking 16 or 17 grand to make 120 or 30, whatever it was, could have been an $800,000 trade. So say, you know what, say you took the 20 off and you kept 20 of your leaps till expiration. So you have 20 of these at $200 per contract. That's another zero because options are standardized to 100 shares of stock. So this is a $20,000 contract. You sold the 20 to get your money back and maybe a little profit. So you're basically holding $400,000 paper gain into expiration. So this is where the stock's at on expiration. And now this is looking forward a year after expiration because this didn't happen until summer of 2015. These expired January of 2014. So now, just to kind of bring this full circle here, you take this $400,000 gain, okay, and how many shares of stock? Well, roughly the stock was around 400 a share, 350, but simple math, I've already done this prior to make sure my numbers are right, you're getting about 1,000 shares of stock for free. Now what I mean for free, you're rolling your equity and your profit into the shares. This is the biggest tip, trick, and wealth tactic that you can take away into your personal portfolio. If you're going to trade options and you're going to use leaps and you don't have a plan to own shares, to collect dividends, sell covered calls, use it as tax advantages, to get loans off of it, to do real estate projects, whatever it is, this is huge. You fast forward about 8 months. You know, this is 8 months after you take the 1,000 shares. You know, this is, you know, July, August of 2015. They announced a 7-for-1 stock split. So you fast forward another month later, the stock that's trading around 600 a share when it was at this time frame. I remember this would be up about another 200 grand. So now you're looking at 600,000. That doesn't matter. What matters is your shares have now been multiplied by 7x. So now you have 7,000 shares of Netlfix. What are you doing? Well, you're an investor. You like the stock. You understand the earnings. You understand the growth. You understand the product, the management, and you're holding on, just like Warren Buffett does. You're not just in it for the short wins. You're in it for the long-term gains. If you need money, you sell a little bit of your shares. All right, so now, you know, we're in 2018 when I'm shooting this video. Now, Netlfix has had an amazing couple of months. The stock's around, of the time of this video, around, I'm going to get a different color for this now. It's around $330 a share. If you take, now this is, again, the stock hasn't paid dividends yet, so this whole process is about wealth accumulation, and it's about having a passive investment strategy. You know, you have tactical asset allocation where you could be doing different trades and picking winners and doing a lot more active management. This is more hands-off. You know, you did the due diligence of using options to get into a good position. You have your 7,000 shares, which could be 14,000, but again, I used just 20 of these. I know I was being conservative because you could definitely double this if you really had the ability to hold everything through and exercise, you know, the total position. But I wanted to use an example where you're taking back at least your initial investment of, you know, 17 grand. What was your initial investment? Plus probably, you know, another 20,000 in profit. You know, that's just the perk of getting it right out of the gate in the first 6-12 months. So you already made this, you got your money back, you made 20 grand. This is the importance of having the psychology. You have to have a psychology of holding through. So these 7,000 shares times $330 a share, I have my calculator to give you the exact number, and we can use simple math because it fluctuates. It's about a $2.1 million trade. You know, if you take 3 times 7, that's 21, and you throw some zeros behind it. This little $17,000 trade, you know, I mean, this is literally less than 6 years ago. This happened in 2012 to 2013. The time of this video, we're 2018. So this differential is like 6 years. You know, even you can even contemplate 5 years when you get towards that level. So 5, 6 years, 7 years, that's a small amount of time to turn a $16,000, $17,000 trade into a position where you get your money back, plus 20 grand, and now you're sitting on a $2.1 million asset, an asset that you can use for all types of things. This is the power of leaps. This is the power of compound wealth building. This is the power of understanding options, and you can't do this without understanding the risks. So what I've done in the last 5 years is I've created courses, the Trading Mastery Program, How to Trade Leaps, Easy Options. These are my 3 core programs and educational pieces for you to learn this. There's a lot of risks involved. I wouldn't recommend going out there and doing this without understanding the risks of options, how to exercise shares, understanding all the strategies, the option Greeks, how to do this like a business so that I can pay you like a business. And when you know that, the possibilities are endless. This trade, which is a good example, and Netlfix has been an absolute star, but there's a lot of examples like this, and there's too many to name off because there's just dozens of trades that happen. But even if you did this and you had just a fraction of that, if you had a $200,000 trade, which is very realistic over a several year time frame, if you get it right, the stock can double or triple. I mean, there's so many examples. This can give you the ability to produce wealth, to produce income, and to generate a portfolio that will stand the test of time. So all I wanted to say is go to tradingmasteryprogram.com. I put a free 7-part video series together teaching you some of the advanced tactics, the insights, the strategies of what encapsulates this trading system. So I hope you enjoyed this. Again, taking 17,000 into 130 is great, but taking 17,000 into $2 million without changing anything, initial trade, just letting time work and understanding the compound wealth effect can totally change your life. Hope you enjoyed this, and I'll see you on the next video.